I'm Georgia Williams with the Investing News Network, and we're here at the PDAC convention in Toronto. Joining me today is Joe Mazumdar, editor of Exploration Insights. Good afternoon, Joe.
Hi, how's it going?
It's nice to meet you.
Thanks for having me.
No problem. So we'll just jump right into the questions. Fabulous. As safe haven assets become more and more appealing, do you expect gold to keep its upward trajectory? And if so, how will it impact the mining space?
Right, so recently gold was doing better than most asset classes, and some of it, I mean, the real long-term demand for gold is driven by the amount of negative yielding debt out there, and that's really the argument for medium to long term. But in the interim with the coronavirus, we've had a spike in market volatility, which also drives people to buy gold for safe haven as a safe haven asset. But that's usually a demand that's ephemeral. It comes and it goes. But because the market has taken such a big plunge, gold has done quite well. But what's happened recently is the gold equities have been dragged down by the entire equity market, and we've seen like the GDXJ and a lot of companies take a big plunge at the end of last week. So even though the gold price is still sitting at about 1560-ish right now, and a lot of these companies do generate a lot of free cash flow at this level, a lot of them have had negative weeks, significant downward pressure on their stock just because of the drag from others, and also margin calls that they need to liquidate something, and they might have made money on these companies or on the gold price itself.
Right. And do you see this translating for the other precious metals?
Well, silver, yeah, but remember the silver is at 50+% industrial as well, so it's getting impacted by the fact that industrial production is more at risk now, and total global growth is at risk.
Right.
And so it's being impacted by all those things that base metals or even WTI has been impacted by.
Right. And now sort of the hot topic is COVID-19 or the coronavirus. And how do you see this impacting the mining sector over the long haul?
So it depends what sector you're in. Precious metals, I see precious metals more being a V-shaped recovery, whereas like base metals, because China is the biggest consumer of a lot of these commodities, they not only, and that's why the Australian dollar has been negatively impacted, and the South African dollar as well, rand. So those commodities will be impacted potentially longer, so I wouldn't go out buying, let's say, copper production right now, but on a V-shaped, I would probably look at precious metals, stuff that you really like but you thought was too expensive, and now you could get into it cheaper. So definitely precious metals producers right now, and the longer term, there's still supply issues with respect to copper and some other commodities that you might consider situating yourself in some of those if they take a bigger hit.
Right.
Because it's really, you have to know that there's projects out there now to feed the pipeline for 2025, which is really where there's a production gap in copper.
And now we always hear about diversification as something investors should really be focused on. And now how do you diversify in a market that we're facing today and still prepare yourself for a downward trajectory?
Well, I mean, in terms of like, we're playing the equity markets, not the commodities, but in terms of where the gold price up, like I said, I think it's more like a V-shaped recovery. And so, part of your portfolio should be directed towards gold and silver for even more beta. But I would suggest right now maybe more on the producer side, and then less so on the exploration side for now.
Right.
But still, the gold price is still at a good position for all stages. So there's one diversification by asset class in terms of commodity, but also stage.
Right.
And in terms of the base metals, potentially not in production, but maybe go look at development plays or exploration, because that's longer term, and there is supply issues with a lot of these base metals that have to be dealt with, especially copper and potentially nickel sulfides.
Now you mentioned supply issues, and palladium has sort of been on an upward trajectory due to its supply issues.
Yes.
So do you see this continuing? Because a lot of analysts have been saying that it's bound to come down, and it still hasn't. So
well, and even recently.
Right.
So So for palladium, the issue really is that, one of my plays is towards the reduction of greenhouse gas emissions, which, includes electrical vehicles, includes copper for more loading, includes nickel, maybe some lithium. But then also in the interim, before the electric vehicle penetration gets to, a rate where we'll see a substantial consumption of these other metals, in the interim, the greenhouse gas emissions standards are getting more tighter in Europe, in China, in Japan, the US, and a lot of countries in the European Union, such that to deal with that, the catalytic converters are needing more loading of palladium. And so there's just not enough palladium out there. And so that is dragging down on inventories, and so the producers like your Norilsk, the South Africans are seeing that, and the South Africans are acquiring assets. North American Palladium, Sibanye with Stillwater, and Impala with North American Palladium. And so I've situated myself in a development project in palladium in South Africa to gain me some of that exposure, because I think that is something that's real.
And now you had mentioned the shortage and rising vehicle emission standards. So sometimes they talk about switching palladium out for platinum, but that's not as easy as
people... It's not as easy. Like substitution, you got to recognize, like when I worked with Phelps Dodge as the market analyst and copper price was going from 55 cents to like $2, people were saying, oh, can we change copper wiring to aluminum? But the problem is that you need with diameter, how much aluminum you need, and then people have to change infrastructure. It's not an easy switch. There's a reason that palladium is in those catalytic converters, because it works better. And the problem is that for the car companies, they need to meet those standards. And for them to substitute platinum and then not get the same sort of results that they get with palladium, they don't want to get hit by the same kind of emission penalties that Volkswagen do. So they got to worry about that on a liability side as well.
Most definitely. Well, thank you very much for joining me today, Joe. It was lovely talking with you.
Okay, thank you very much.
I'm Georgia Williams with the Investing News Network.